Interesting day in the markets today. Of course, yesterday we had a fairly sharp sell-off. The Dow was down about 500 points yesterday on back of concerns about this continuing and really escalating trade war. Tariffs, particularly on intellectual stocks, and really impacted, importantly, investments into technology stocks. And that put a lot of pressure on tech stocks yesterday, particularly in semiconductors and telecoms, et cetera. All had very sharp down days. So this morning, yesterday afternoon, Peter Navarro came out and said, no, that's not what we meant at all. Of course, trying to backpedal off of this announcement. And the markets kind of bought into it late afternoon yesterday. This morning, we opened up higher, and we're up about 14 points earlier in the day. It looked like we were going to get a bit of recovery, but by the end of the day, institutional money really came in, started selling out of stocks once again. We only ended up about 5 points. So, we really didn't make a lot of progress in terms of recovery. Now, there's some good news that has happened so far this week. The good news is that we had run into resistance previously up here at about 2780. And if you're watching our live stream right now, I have this mapped out on the screen at realinvestmentadvice.com or at our Facebook facebook.com/realinvestmentadvice, and you can actually see this chart. But we ran into resistance after breaking out of a consolidation range from early May, and we rallied up to resistance. We failed. We came down, and we were actually testing that previous breakout level, which was supposed to be support, where we were going to add some additional exposure to our portfolios if we could have held on to that. But of course, on Monday, we broke through that. I lost my beer bet on Monday as we broke the 100-day moving average. That article today is on the website. It's called The Beer Bet. It's our technically speaking post for Tuesday, going through the risk of the markets and where we are currently, and particularly and laid out kind of our new pathway models for our portfolio projections right now. So that's on the website now. Simply go by realinvestmentadvice.com, download that article. That kind of lays out our premise for where we are and what I'm explaining to you right now. But we're now trapped back in this previous trading range that we were back here in early May. So we really haven't gone anywhere. Now here it is, the end of June. We're wrapping up the quarter in the next couple of days. So importantly, look for the next couple of days. Look for some kind of wild market action, because we're going to have some portfolio rebalancing and things that are going on. But we're back in this trading range from where we were in early May. So 2 months we've gone nowhere. Which is a little bit frustrating. But we are holding this important level of support right at the 100-day moving average. The 50-day moving average held in today. The market's got above the 50-day. We held on to it. That's good news, technically speaking. The bulls are still trying to hold this game together right now. That is good news, and it certainly keeps us biased towards equities at the moment. But there's certain deterioration that is continuing to occur here in the markets, and as we watch that, it does lead us to some bigger concerns about expected rates of earnings growth, valuations, etc., particularly going into the next few months as we head into summer. I want to change this picture from a daily view to a weekly view, because as portfolio managers, when we manage money for clients, we really like to look at longer-term views, and this is where really the impact and the importance of a weekly chart really comes into play, because it strips out a lot of the daily volatility, the ups and downs, what happened on Monday. It all kind of dissipates, and you get to see a better picture of what's going on in the markets currently. And what's important here is that really ever since the beginning of 2018, the markets have really kind of struggled in a sideways pattern here. We haven't gone anywhere, so to speak, really of any consequence. But importantly, the market has been trying to form some higher bottoms. And this movement of creating higher bottoms is bullish to the point as long as those bottoms remain support and then the market continues to move higher. The big risk here, though, is that we get a break at some point below this consolidation process on a weekly basis. And this chart is actually in the blog post today at the website, realinvestmentadvice.com. There is about a 500 point downside gap if we break to the bottom of this consolidation. We are sitting right now, we're sitting on the rising bull trend line that started back in early 2016. And between that trend line and the next level of real support is almost 500 points to the downside. So again, this isn't a market to trifle with. And we've talked about risk management. We've talked about portfolio management. We've talked about having a strategy and a sell discipline. There is real risk here. While the market is trending positively, and I certainly don't want to discount that, and I also don't want to discount the fact that we are long equities right now for the most part. We're still holding an overweight position in cash, holding a lot of fixed income. That makes up about 50% of our portfolios right now, our hedged positions, cash, and bonds. The risk, though, is to a downside break. And again, there's just really nothing below the market for about between 300 and 500 points before you find any real level of support. So that downdraft could be fairly quick if it occurs. And if you don't have a strategy or discipline in place, I certainly encourage you to get one. If you actually scroll to the bottom of our post today on the website, there's actually a link to our 15 portfolio management rules that we use in shop here at Clarity Financial. If you follow those rules, at least it gives you something to manage your risk with in your portfolio. But understand that we are very late cycle here. There's a lot of people talking about, well, this just bull market's going to go on forever and it's going to be great and it's never going to correct again. Listen, I get it, but you have a lot of things that are mounting up right now that have led to previous reversions in the past. You've got excess valuations, you've got Fed Reserve tightening monetary policy, you've got a reduction of liquidity, not from both the central bank as well as global central banks. You've got inflationary pressures rising, you've got trade tariffs in progress, which are basically a battle on corporate profits. Earnings comparisons are going to get very tough here in the next quarter. So you've got a lot of things that are potentially pressing this market right now that you should not dismiss, and you definitely need to have some type of plan in place in case something goes wrong. Look, we buy insurance on our house in case the house catches on fire. We buy insurance on our cars in case we get into an accident. People invest in portfolios all the time with no insurance whatsoever, despite the fact that history is replete with incidences of car crashes, fires, and hurricanes. So, have some plan in place to ensure the most valuable asset you have next to your family, which is your money, which is going to take care of your family in retirement. Make sure that you've got some type of insurance policy in place to protect that capital when and if something should go wrong. Because when something goes wrong in the markets, it is always something we never expect to happen. If you're talking about tariffs being the catalyst, it's not. We already know about tariffs. What we don't know is the problem that rising interest rates or lack of liquidity or tariffs cause somewhere else in the economy that nobody's looking at. It's always that unexpected event. It's the filing of bankruptcy by Lehman. It's the crash of Enron. It's a variety of things that happen we have no expectation of that causes the problem in the markets and takes a very large chunk of capital away from you. That's why you need a discipline and insurance in your portfolio today. It's your money. Make sure you take care of it. Get by the website, realinvestmentadvice.com. If you need help, we're happy to do it. Myself, Danny, Danny Ratliff, Richard Rosso, we're all here to help. Happy to do it. Send your questions, emails, comments. If you've got a question, we're happy to answer them for you. realinvestmentadvice.com. Quick break. We'll be back on the Real Investment Hour. Danny Ratliff, Richard Rosso, right here with you and your money on the Voice of Texas. Don't go away.
Want a longer talk with Lance about your money? Request a personal one-on-one at realinvestmentadvice.com.